Glencore became the third most valuable locally listed company when it made its JSE debut yesterday. It's worth 715 billion rand, but at least 5% of that needs to be held by locals before the stock can be included in the JSE indices. To this end, the company was trying to place shares with institutions yesterday. Absa Capital's Richard Stott is with us. My insight or my information, Richard, was that there was a book build in process, or was going to be a book build, but that didn't happen.
No, so actually Glencore had no need to raise primary capital themselves, and nor were there any existing shareholders who were willing to sell into the listing yesterday. So essentially what happened was Glencore listed by introduction only. A big part of our role in the lead up to that listing event was to educate investors around the company and ensure that the local investor base were fully up to speed with the company and able then to make an investment decision around buying stock once trading commenced yesterday morning. So what we found was the efforts that we undertook translated into significant buying from the local investor base. In total, nearly 52 million shares traded yesterday, which we largely interpret as buy orders from the South African investor base, who had the ability to buy Glencore from yesterday and have that be classified as a domestic equity in their portfolios.
To 50 million shares at around about 50 rand is
correct. So
2.5
just
billion.
north of 2.5 billion.
Long way
rand.
from 38 billion.
No, absolutely. But I think the company and the market recognises that it will take some time to get to that 5% threshold. But we are confident that it will get there eventually.
Just unpack that for us. They have to that 5% threshold would be in market cap terms that they've got to, South Africans have got to own 5% of the company, which is around about 38 billion.
Correct.
Before
the company qualifies for indexation inclusion in the local market. So there's an important distinction to make here, that the company, by listing on the JSE, is now classified as a domestic equity. So essentially all South African investors, be it retail or institutional, can own Glencore shares without eating into their foreign ownership limits. The next threshold, as you mentioned, is getting 5% of the market cap onto the register, which would then trigger indexation inclusion in the top 40 in the SWIX indices as well.
And that would give rise to another wave of buying.
You'd anticipate so, yes, absolutely. Yeah.
How big is the second wave, if you like, the indices and the indexation and things like Satrix?
It's very difficult to quantify. A lot of funds, do follow the index quite religiously, but then there's another pool of liquidity that follows it slightly more loosely, and that's the kind of pool of liquidity that's slightly harder to quantify. We certainly think that some of those investors will start buying in anticipation of index inclusion as that 5% threshold gets closer. So we don't expect there to be a sudden pop in incremental buying once that trigger is met. We think it will happen over time, over the next few months. The JSE's come out and said that the next opportunity for Glencore to be considered for inclusion is going to be at their March quarterly review. So we do think over the next few months there will be gradual buying up of stock. Obviously from fundamental buyers, but also from these index tracking funds in anticipation of that event. So
presumably there would also be some switching?
Yes, we believe so, and certainly when we've spoken to investors, there tends to be a general kind of pair trade whereby investors are seeing this as an alternative investment into a globally diversified miner to the likes of BHP and Anglo American. So we wouldn't be surprised to see some switching out of those two into Glencore as investors try to make room
if I was
portfolio.
a hedge fund player, I'd be going long Glencore, short Anglo. Obvious, because it appears as though Glencore is going to have this almost inherent demand, whereas what are you going to switch out of?
Well, we'll see what happens, but certainly I think a lot of investors are trying to make room for Glencore, and given the size of the company, we anticipate significant buying orders for the stock. And whilst investors sit on significant pools of liquidity that they can put into this without necessarily having to juggle their existing portfolios, we do think there'll be some selling of those other two stocks to make room.
So you've had the chance of going around talking to investors in South Africa. What has the reaction been?
I think they've taken it very positively. The ability, as I say, to get exposure to what is a globally diversified miner as an alternative to the other stocks listed down here, to get exposure to that through a domestic listing has been very well received. And I think investors have recognised that it's also a strong statement from Glencore around their ongoing commitment to the African continent. They are one of the largest mining operators on the African continent, and this is seen as an important step in their future strategy.
Are many South African institutions invested in Glencore already through their offshore alliances?
There were some investors who had holdings through the London line. Not that many, again because of these foreign ownership limits. So we certainly see this as being the big trigger event to increase that South African ownership. And we'd anticipate that some of those holders that did hold the London line will move that over to Johannesburg in order to reclassify their holding as a domestic equity.